Most traders have no idea what's really going on behind the charts, but when you look at OANDA's order book, you start to see patterns that can completely change how you trade. In this video, I'm going to show you 3 incredible insights from OANDA's order book data that reveal exactly how the crowd behaves, why traders love placing orders around round number levels, how they move their stops the moment price gets close to their entries, and why so many orders sit far away from the current price, which are hidden liquidity traps waiting to be triggered. By the end of this video, you'll see the market through a different lens, not just as price action, but as human behaviour on display. Let's jump in. The very first thing you'll notice when you look at OANDA's order book is just how predictable traders can be. Look closely, you'll see huge clusters of orders forming around round number levels. Why does this happen? Because round numbers feel safe. They're easy to remember, they look neat on a chart, and psychologically they give traders a false sense of structure. But in reality, those levels often become liquidity magnets. Institutional traders, the ones who actually move price, know this. They can literally see where retail traders have bunched up their stops and limits. So when price approaches one of these levels, you'll often see sharp spikes or fake outs. These are engineered to grab that liquidity before the real move begins. If you start thinking in terms of where the crowd hides, these round numbers stop being trade entries and start becoming liquidity clues. Let me show you a perfect example of this in action. A few weeks ago on Euro USD, price had been grinding higher all morning, slow, steady, textbook bullish momentum. But when I pulled up OANDA's order book, something immediately stood out. A massive cluster of pending sell orders sitting right below 1.0900. Now, remember what we said about round numbers, they attract attention. And in this case, you had a dense wall of traders waiting to short from that clean level, while just below it there was another thick cluster of stop loss orders from traders who had been buying the rally. So what happened next? As soon as price tagged 1.090, we saw a quick liquidity grab, a sharp spike above the level that triggered all those stops and filled the waiting sell orders in one move. Within minutes, Euro USD reversed hard, dropping nearly 40 pips before stabilising. That's the power of understanding where traders are positioned. The crowd saw a breakout, but the data showed a liquidity hunt. And once you've seen this happen a few times, you'll never look at round numbers the same way again. The second insight from OANDA's order book is even more revealing, and it has nothing to do with indicators. It's about how traders behave under pressure. When price begins to move back towards a trader's entry, you can actually watch fear creep in. OANDA's order book data shows that many traders respond by doing the worst possible thing. They move their stop loss further away the moment price gets close, hoping to avoid being stopped out. That single moment of hesitation is fuel for the market. Here's a great example. During a pound-dollar trading session, price was hovering just below 1345, a level where thousands of stop orders had been building for days. As the market started pushing higher, instead of accepting the loss, traders began shifting their stop losses upward. You could literally see the stop loss cluster migrate higher in real time on the order book. Then it happened. Price cut straight through those stops. One cluster triggered the next, creating a domino effect that accelerated the move until the entire group of sellers was wiped out. This move wasn't driven by news, it wasn't fundamentals, it was driven by a crowd of traders who refused to accept they were wrong. That's the real edge of watching the order book. You're not just tracking price action, you're watching fear, hesitation and denial being traded in real time. The third insight is one a lot of traders completely miss, yet it says so much about how the crowd really thinks. If you scroll further out on OANDA's order book, you'll start to notice huge clusters of pending orders sitting miles away from the current price, often hundreds of pips above or below where the market is currently trading. Why would anyone do that? It's because these are hope orders. They're placed by traders waiting for the perfect setup that almost never comes. Sell limits far above, buy limits far below, all based on the dream of catching a top or bottom. And here's what's really fascinating. These distant clusters actually form hidden zones of liquidity that institutions can use as long-term target. Let me give you a real example. Last month, while pound dollar was consolidating near 0.667, OANDA's order book showed a noticeable block of pending orders stacked around 0.675, nearly 100 pips above the current price. At the time, most retail traders ignored it because price was nowhere near the level. But later that week, volatility expanded. And when it did, price drove straight into that distant cluster, tapped it almost perfectly, and then reversed sharply. Those hope orders acted like a magnet. Price was drawn toward them, consuming the liquidity, and once the orders were filled, that fuel was gone. That's when we saw the reversal begin. This is why the order book is so powerful. It doesn't just show you where the traders are, it shows you where the traders are waiting for things to happen. So when you study OANDA's order book, don't just focus on what's happening near the current price. Zoom out. That's where the biggest traps form, the quiet liquidity pools build, and the most violent turning points often begin. Because in the end, price doesn't move randomly, it moves towards trapped expectations. So here's the real takeaway. The order book isn't about predicting the future, it's about watching traders reveal themselves. Every cluster you see represents fear, hope, hesitation, and unfinished decisions. And when enough of those decisions stack up in one place, price moves, not randomly, but inevitably. But most traders never see this. They react after the move, chasing their candles and indicators. You don't have to. Because when you understand how orders build, shift, and get consumed, you stop trading opinions and start trading pressure, imbalance, and human behaviour, which is what the markets are all about. That's the real edge.